what is Meta stock doing today? It's not doing AI, it's not doing chips, then what is doing? Well, Meta, the former Facebook, now has Instagram, WhatsApp. It has billions of user base. But you also see the CEO showing up in courts. The company has a lot of lawsuits, court battles, and legal risk. Add in a lot of heavy AI investing, spending, and metaverse concerns. The stock investor is kind of sketchy about what is going on today. So let's look at whether the company is still a long-term winner or facing some bigger risks more than we realize. And if it is a buy, let's look at where is the buy point and take profit point. In Meta's case, let's look at the fundamentals first before we look at the technicals. If the fundamental says not a buy, then there's no need for us to dive in the chart and see where's the buy. Looking at 4PE. 4PE is how expensive the stock looks based on future earnings. It's like the regular PE, but forward looking. It's looking at the future. It's at 16.7. It's good. It's not expensive. Remember, NVDA is around 20 and Tesla is like over 100, right? So now you have a comparison point. 16, it's good. It's not that expensive. So you're not buying a premium. Free cash flow, they have 48 billions of free cash. That's really crazy. That is a lot of cash sitting in their company. They can do another investment, another purchase of other companies. They can move around. So in that case, the company is really safe. Revenue growth is how much a company's sales have increased over time. We want the company to keep growing. It's at 20%. This is an amazing number too. It's not even a single digit growth, it's a double digit growth. PEG ratio, price earnings growth ratio, it is like the regular PE ratio, but add a growth factor to the formula. It shows whether a stock is cheap or expensive relative to how fast it's growing. So the reading is PEG ratio around 1 is fair value. PE matches the growth rate. Less than 1 is undervalued. That means it's a good discount for us, investor, to buy. More than 1, that means it's overvalued. So you're paying a premium price for the growth. It is sitting around 0.8. It's under 1. It means it's undervalued. So it could be a good time for us investor to start dive in. ROE, return on equity, it is how much profit a company makes for every dollar that shareholders invested. It is how efficient the company is making money for us owners. We want the company to be very efficient generating profit. It is at 33%. This is another amazing number too. Usually below 10, that means it's a weak ROE. Around 10 is okay. Around 15 is good. Over 20 is very good. It is very strong, nice return on equity. So you would wonder, how come they're not catching up? Revenue growth and ROE, they're not the same. Well, revenue growth shows how fast the company is getting bigger. ROE is how well the company is returning profit. So the company can still grow fast, but not making money because it's spending in other areas that's not making money yet. It's doing some research. It's trying to pay money for the lawsuit. Case like Meta, they have a lot of cash. Growth is good. ROEs is also good too, but they're not necessarily the same level. But for us investors, we want a strong ROE. That is better for our side. Well, looks like Meta is a buy based on all the fundamentals. Then let's look at the technicals. Where is the buy point? Also for 3 months outlook, where to take profit. Well, looking at the chart, it is a horror story, I would say, because basically last year, October, around Halloween, yes, it is. It's all under 200 SMA. A little while, well, I say 3 days, poke above, and then got smashed down. It is a sad story. Well, why is it? I would wonder, you would wonder too, you might. Why is it the fundamentals so good and the technicals so bad that they don't match? Although you will see a lot of narratives, that there's always some people generating stories to cover why it's down so much. Zuckerberg lost a shirt, one of the employee left, or one of the employee leak something, there's always a story. But if you stick to the fundamentals and the technicals, you'll be safer. That's why I always mention in my videos, have a buy point, take profit point, cut loose point, and then move on. So if you do want to buy, I say right now it's not a buy because it's under 200. It has been down. There's a lot of selling pressure. Although fundamentals strong, not a buy point right now. If you do want to buy, wait until it swim above the 200 SMA. I would say 660, not right when it swim up, when it stand above and stand firm, strong, above 660, that would be a good entry point to touch the water, not go all in, look at what it's doing, and that would be a safe spot. Although you could do something like this too, briefly go up, and then for the rest of the days it all come down. So have a cut loose point is very important too. If 660 is the buy point, where is the take profit point? All-time high was around 799. Wow, close to 800. So 800, 780 to 800 would be a good take profit point because we know Meta is very volatile, powerful in a way. It can go up $20, $30 a day and it can drop $20, $30 a day too, based on any news. And then where is the cut loose point? Under the 200 SMA, which is 640 and below. We don't want to panic sell when it dip under. We want to watch what is its reaction around this area, right? We want to see, is it try to battle and go up, or it shows no signs of life and just keep sinking under. If it's the second case, then we want to cut loose and move on to different stock. Because looking back, let's say if you bought around 700, right? You think, oh, it's a good timing. It's above 200 SMA. It's not far to the cushion. It's good distance to all-time high, so you make a good profit. And when it dipped below, you didn't cut loose. Other chip companies are going all-time high, pushing. You will wonder why your investment is not going up. If you cut loose around 650 and your entry was around 700, you lost $50 a share. But you saved the money to different stronger stock. Have a plan, have a take profit and cut loose and move on. Good place to add would be 680 to 700 because when it stands above, it has a chance to attack all-time high and beyond. The reason I say 3 months outlook is because nobody knows what's going to happen in the near future. A little more exaggerated description would be, what if Meta goes down below 500? Although the fundamentals look good, we don't know what it's doing with their investment, what is going behind the books. So take profit when you can, cut loose when you have to, and move on. Other YouTube videos, other investors' channel, they tell you what to buy. They don't mention when to sell, where is the take profit. So if you do notice that, please recommend them my channel. For my personal experience, I used to buy and hold because that's what I was taught. When I started investing, there wasn't Google, there wasn't AI, there wasn't any guru. Buy and hold cost me a lot of downside. I didn't sell at a good chance. Instead, I keep holding it. So even though we can't sell at the top, but we can take profit while we can. All right, enough rambling. The important dates for Meta is July 29th. Expected move is 9.9%, almost 10%. What do you think? Is it a chance for it to come up, poke above 200 SMA and keep going? Or it might go dip below 500. That would be devastating. All right, thank you for watching. I'll see you next time.